Good morning, everyone. Very welcome to you. Today we are going to be going through the inventory count attendance. It's a work program that is contained in Probe, and we're just going to talk about what the actual requirements are for those. My name is Helen Muller. I am also an auditor. Once upon a time, I was also a new auditor. I started articles at a medium-sized firm, and it was very overwhelming. But I want to say to you today, don't let yourself be so overwhelmed that you don't enjoy the process. It is an exciting time to be with people that are doing the same thing as you, studying the same thing, also having to learn all these things at the same time. So there's no other time in your life that it will be like this. And also when you first start articles, there's really very little expectation of you knowing anything. It's more about an expectation of your work ethic and your ability to learn, your excitement to learn new things. So there's very little expectation on knowing things. I'm sure that since you've probably started your journey in auditing, you have probably noticed that even if you studied and you are far along in your studies, it is still that you need someone to show you how to apply your academic knowledge. So we're here when we do these training sessions, we're trying to make that process a little bit easier for you. So hopefully we achieve that. If you are having any problems with this signal, then please can you log out and log back in. Let's just take a look here. Right, please can you make sure you are all muted, but I will also double check that you are all muted. This is just to avoid any background sounds interrupting us while we're trying to get through the session. If you have any questions, you can use the chat or question function, which is available to you. You type your questions in there and we'll get back to you. Sometimes there might be a delay if it's something that I want to answer, but I need to keep an eye out on the chat, which I will do. I will keep checking in every little while. If any signal is lost, please exit and come back in and try to use the app rather than the browser, which might help us maintain signal. And a recording of the session will be made available probably next week, just so that if you've missed anything or you want to re-listen to all the awesome auditing jokes, then you are able to do so. Okay, some unwritten rules. Please can you make sure that you remain present for the session. When I say remain present for the session, what I mean is minimize your distractions. Put your phone screen down on the table, make sure it's on mute, don't open your emails. It's very easy on a webinar setting to get distracted with everything because you're not sitting in the room with the person. But if you try to minimize those distractions, hopefully you'll stay with us. Okay. Also, when you laugh at all of the auditing jokes, laugh out loud, because then this will keep you awake for the whole session, because auditing is, for me, the most exciting subject in the world, but I am told other people don't enjoy it as much as I do. So laugh out loud, laugh with your friends, whatever the case may be, and let's enjoy the webinar together. I am going to switch off my video. I will pop back in every now and again. It's just going to help with the signal and making sure that the slides change and you're not lagging, and it's just going to make for a smoother webinar. Right. So today we're going to be going through the inventory counts. When is it required? So where does this requirement arise from that we have to do an inventory count? We'll go through what inventory count instructions are, as well as locations, how the client performs their count and what we need to be on the lookout for. We'll touch also on estimates, so estimates in WIP balances or the actual inventory. Talk about our test counts, and then things that we need to do when we're wrapping up the count, as well as the documentation that is required to be filled in. What you will need also, let me just touch quickly on the material. You will only need your slides today, and if you do not have your slides downloaded, there is a link in the chat which you can use to go and download the slides. We do not need the caseware file that you have been working on throughout the other sessions. Today we do not need that. Later on I will give you an example of a completed work attendance program, just as a sort of a guide on the expectation of the detail in the documentation that is needed. I think as someone who, I still run around and I don't quite audit, but I will say I am still involved. I review files, and I find the most common failing across files is really a lot to do with documentation and just not explaining something correctly. Okay, but we'll chat about that later again. Right, so let's start today with a poll. So I'm going to share a poll for you, and all you need to do is select an answer, and then we will be able to see that, wow, some of you are really quick off the mark. Well done, everyone. Clearly you have had to do this a few times so far. All right, I'm just waiting for a few more votes to come in. Okay, so I can see that some of you have said you do not have the material downloaded as yet. So you are able to download, as mentioned, in the chat box. There is a link to the material. You can download it. You can do it now. You can do it a little bit later if you want to do it in a break so it doesn't interrupt your signal or make it slow so you're struggling with the webinar. Like I said, the material is just the slides for today. Okay, thanks everyone for participating in that. I'm glad to see you are all still awake. It is rather early to be falling asleep though. Right, then, so we can have an idea of what we're dealing with today, or rather who we are dealing with today. Let's see where you are in your articles. Well, maybe some of you are not in your articles, so let's have a look. For those of you who vote for other, perhaps in the question box, tell us a little bit about what you mean by other. Okay, I'm just checking if anyone has told me a little bit about other. I see we have quite a varied makeup today. Okay, so someone says, I'm working at an auditing firm. It's my second month, no prior experience in auditing. Okay, good. You have come to the right place. Do not fear. A new product owner for Probe. Okay. Welcome, Sandini. I happen to have seen your face before. All right. Okay, so let's take a look at the results. Right, so we have quite a few first years, some second years, some supervisors or people who have completed their contracts, some people not completing contracts but at an auditing firm, so having to do some auditing work, and then the other, like our product owner, and yeah, others who have joined us for other various reasons. So welcome to you all. You have come to the right place. I will say also, no stress or not a waste of your time if you are a second year or a manager. I always find that doing inventory counts training is worth the effort. Everyone needs a little bit of a reminder, especially now when we're going into the busy season. There's a lot of stock counts that happen at the end of February. There are stock counts scattered elsewhere in the year, but a lot of them happen at the end of February. And it's always good to have a little rehash. You might pick up something you didn't pick up before. So welcome, you are all at the right place. There is no not being in the right place today. All right, and then our last poll for the day we are going to do is, did you attend last week's introduction to auditing in Probe? I was super excited because for one moment there was 100% yes. And I thought, wow. I'm just going to wait a few more minutes for a few more votes to come in. Nothing worse than when you're getting ready to click that button and somebody closes the poll. Feel a little bit schneid maybe. So for those of you that have not yet watched the recording or didn't manage to attend last week's session, do yourself a favor and go and download the recording. There's just a lot of, I'll say, really a framework for the auditing. So just laying the basis for what we will be doing in the sessions going forward. So some common terms that are used, some concepts that are important to understand, words you're going to hear bandied about your offices like overs and unders and review queries and notes, etc. So just some basics which really filter to all the, well, most of the other sessions, as well as to what you will be doing in your day-to-day. All right, so I have put the results up there. So for the majority of you, you did attend the session. Thank you. Some of you watched the recording. And for those of you who didn't yet, do yourselves a favor and just go and have a little squiz at that. All right. Let's get back to the slides. I see there's just a small delay on my side with the slide changeover, but anyway, it hopefully will improve a little bit later. Okay, so let's get right into it. When is an inventory count required? So the requirement to do an inventory count comes from ISA 501, the auditing standard which deals with specific considerations for selected items. So please take note. I think a very important thing to touch on is it doesn't come out of ISA 315. So recently we have now had a big change to ISA 315, which is the big risk assessment standard, which tells us what we need to do when we're planning our audits, what risks, how we need to go about assessing our risks, what we need to look at, how we can go about assessing it. And in that standard and ISA 330, it will talk about when we have a risk, we are going to do some work. This is very important to note because in 501, where the requirement for an inventory count is, it isn't dependent on if we have a risk or not. So what the standard says, as you can see on that extract, is if inventory is material to the financial statements, you shall obtain sufficient appropriate audit evidence. Okay, so it lists a few procedures for us to do, that we shall attend the count, we'll evaluate the instructions, observe the count, inspect the inventory, and perform test counts. And then we will also perform procedures over the final inventory records. Please take note here. So I do feel like sometimes we get so caught up when we're at the inventory count that we think the be all and end all is us going to do a test count. So it is not just about the test count. When we go and do an inventory count, we are also observing the clients performing their inventory count, because this gives us prime opportunity to observe the controls over the accounts, which gives us a lot of assurance. We are very interested in the inventory balance at the year-end date. So if we observe the controls over the inventory count that the client has at the year-end date, then that gives us a lot of assurance about the stuff that we do not count, because we only do sampling, right? So we're only counting part of it, and we want some comfort about the rest of the items and the rest of the count. So just important takeaway, it's not coming from ISO 315. It is a requirement to always attend an inventory count if the inventory balance is material to your financial statements. So in Probe, by the way, there is a stock attendance work program which sits within the inventory section 405, and that work program is very much coming straight from the standards. So it will talk about these required procedures that you see from the extract, and it will talk about, in those application paragraphs, the explanation coming through there is pulled through to the audit program. So let's just also touch on, let's deviate. I like to say we take a little side road when we do any training with Helen. So let's take a little side road and chat about one thing. If you have not yet cracked open your auditing standards, do yourself a favor and do so. It is not like having to read legislation and referencing all over the place and trying to figure out what they're talking about. The auditing standards, as you can see from the extracts, are quite easy to follow, easy to read. They're very logical, explain a lot. There are interpretations, but that's just because the standards are principle based. And you see those paragraphs. So the requirements paragraphs are the numbered paragraphs that'll say the auditor shall do X, Y, and Z. And you will see there is in brackets a little blue reference, which is A1 to 3, A4, A5. Those are application paragraphs, and what those paragraphs are an explanation of what the requirement is, or guidance on how to apply it, etc. So it provides context to the requirements. So if you haven't done so already, perhaps go and read, even try this one. Try the ISO 501 standard, pick up your auditing program for inventory and take a look. You will be able to tie it straight into the standards. All right. Back on the main road, everyone. Okay, so let's talk about when or instructions. So we are interested in the client's instructions for the inventory counts because we want to know that they have instructed their staff on what to do and how to do it. Us as auditors, we will get sent on multiple inventory counts, so we get quite used to it. But like I said earlier, you will still want to sometimes have a little brush up, attend a little training session, brush up on what the requirement is, where we can improve. But we do a lot of inventory counts. Your clients in a business, they are, because we tell them to, and because they have controls, and because they want to have some control over their inventory balance, they will do inventory counts. Some of them will do inventory counts regularly. Some of them do it monthly, for instance, especially if they're working with a periodic system. And in that case, there are some very experienced counters at that company. However, sometimes there is a company where they will only do a full on stock count at the year end to ensure that inventory balance at the year end is correct, it is accurate, that the stock exists, that the all stock is recorded. So for those companies where they only do it at the year end, there's not that much experience amongst the staff. Some of them might have been new during the year. So it's very important for the company and whoever's in charge of the stock count to issue instructions to the staff on what's going to happen. So what time to arrive, what are you going to do, how are you going to count, what's the whole process. So this helps them understand what to do, which gives us comfort on the fact that everyone is comfortable with their responsibilities on the audit count. It also, the inventory count instructions will assist us in the assessment of the controls over the count. So we are interested in looking at the instructions and assessing whether it addresses everything we would want it to address. I'll say want to address because sometimes it's not going to address everything we would like or need, and in that case we shall communicate with our client if it is something of a nature that could turn into a material problem. All right, so usually, and I know there's probably a whole lot of you sitting there having a chuckle because, oh Helen, no one gives written instructions. Yes, that does happen. So it's very rare for the client to issue written instructions to the staff, in which case, if they do issue written instructions, we will request a copy of those written instructions to perform our assessment of the controls over count. And that's really first prize. However, there are a lot of cases where this is not a written instruction that we can take a copy and check by ourselves. Second prize is to be present when the stock count instructions are given to the staff. So I often hear firms saying, oh, we go and we perform our test count after the client has performed their test count. But in these instances, you are not getting the amount of assurance you could get out of standing there and listening to the instructions being given to the staff. I understand from a practical perspective, it's not always possible to be present from the start of the client's audit, but where we can, we should really try to do this so that we can firsthand hear the instructions being given to the staff and do our assessment. Okay, you will have to take notes while you are standing there listening to the instructions because you might forget later when you have to fill in your documentation. As a very last resort, if we do not have written instructions and we cannot be there when the client issues their verbal instructions, then we should inquire of the staff what they have or what instructions were given to them regarding the count. Okay, so we will start with an open-ended question, is what I always like to say. So when you go up to one of the staff members that has attended the count, or organize the count, you will say, what instructions did you receive when you were told we're going to be doing this inventory count? And then make notes of the stuff that they tell you. While you are making the notes, you will then, and don't be afraid also to have your inventory work program with you and go through that also at the same time with the staff member. So they will give you their answer and you can check your inventory count attendance work program or other notes that you have and check that they have covered everything you need them to. After you've asked the open-ended question, then sure, go ahead and speak in more specific questions such as, did you get told to count from this side to this side, or did you get told to tag the inventory you've counted, for whatever they didn't cover with the open-ended question. The reason being, when we ask very specific questions to our clients, they will answer just that question. They will not give us any further details. So we lose the opportunity to discover more information if we start off with the specific questions instead of starting with the open-ended questions. All right. Also, just a side mention as well. So I'm sure you all have now gone through the process of creating a Caseware file and talking through that process. Usually we will create a Caseware file when we go onto or go to the audit, right? So usually this is after year end, might be a few weeks, might be a couple of months, depending on what type of client it is, how organized, where we have capacity, etc. So at the date of the inventory count, we usually would not have a Caseware file available to us. So usually what a lot of firms will do is extract the inventory count attendance work program out of the Caseware file. It doesn't break it. You can PDF it or run it into Word, etc. And they will keep a copy of that, because on the date of the audit, you will need this document to go through the account procedures to make sure we've covered everything. And it's, you, like I said, you will not have a Caseware file available, because that only gets rolled forward or created at the date of the audit, which will be later than the year-end date. Okay. Unless you've done an interim audit, in which case, easy enough, but still we would usually extract it to take along with us to make sure we fill in the documentation appropriately. All right. I see there's not any questions yet. Even if you wish to just comment, you can. The point is to make sure you're all still with us out there. Okay. So some specifics about the inventory count instructions. We want to consider who is supervising the count. So there is someone who is responsible for the count, providing guidance to the staff so that everyone knows what they are doing. So no one's running around like a bunch of headless chickens. I'm sure you've all been involved in a project, a group project, where you all cringe and think, oh, I wish I could just do this by myself. But someone's got to take the lead, delegate the specific tasks needed to complete the project, make sure everything gets collated at the end, make sure everything has the same look and feel. So same thing here with an inventory count, same principle. We want someone who's going to instruct the staff, be there available for questions, collate the information at the end, make sure the count is done appropriately, etc. We would prefer, very much prefer, that the person responsible for the inventory count is not the same person who is responsible for the inventory on a day-to-day basis, because there is then the potential for this person to manipulate the inventory records, because they know if they had been, okay, also as auditors, we tend to always consider worst case scenario, but let me lay it out, worst case scenario. Let's say the person who's in charge of the inventory is committing fraud, stealing goods, but covering it up because they're responsible for the inventory, so it's easy enough for them to manipulate the inventory records. Then we get to the inventory count date, which is one of the controls over the inventory quantities in the accounting system. But now the person who is doing the day-to-day inventory is the person in charge of the count. So when all of the information comes back in from the count and there's discrepancies on the numbers, if they are the same person who's responsible for the count, it's easy enough for them to again manipulate the records to hide whatever they are doing. Okay. Sometimes it is not possible. The client does put the person who's responsible for day-to-day inventory in charge of the count, because they just know the system, know the where everything is, know how everything is working. That is okay, but then we would probably prefer some other control to be in place, such as a manager or another very senior person in the company to also be present at the count. We would also like someone, not this person responsible for the inventory, to check that the inventory count records, so the rough count sheets, are not manipulated before the comparison to the system, and then also someone to be approving any adjustments which are made to the inventory system after the count. Okay, let me just touch on what I'm talking about when I talk about adjustments which may happen. So in any entity, it's especially very large entities, there may be a discrepancy between what is actually on the floor, in the warehouse, at the premises of the client, and what is sitting in the accounting records. It could arise from various issues, a processing issue on the accounting side, something got damaged in the warehouse and got thrown away, but no one told the accounting staff, so no one wrote this item off. So there could be varied reasons for any discrepancies between what is actually present and what is in the accounting records. So the purpose of the count, what we do when we do a count, is to go and the client will count their stock and make sure that ties in with what they've got on the accounting system. So there are sometimes adjustments which then we would like investigated just to make sure that the reason for the adjustment actually makes sense. All right. Taking a little side road again, also these days, I don't know if anyone of you has a client which perhaps, pop in the question block if you have experienced a client with electronic stock. So I have seen an entity with electronic stock. The stock was codes related to some airtime. So what happens is they have literal electronic stock, which is codes on a server somewhere, which then they sometimes would transfer into a physical vessel, such as a card, a SIM card, a voucher, whatever the case may be. They would imprint the code onto there, but nonetheless, that physical vessel is still not the actual inventory. The inventory is sitting as the codes in the system. So in that case, a lot of these procedures will be difficult to apply. We can't rock up and do accounts. In the instances where you have electronic stock, you would have to think of other things you would need to do, such as making sure, and in this instance, it would probably turn much more into a control test than any substantive testing. So the control test being looking at the controls over how the codes get into the system, how they are protected, how they go out of the system. So the auditing standards have a little bit of catching up to do, because I'm sure airtime and other sorts of codes are not the only electronic stock out there. I'm sure there will be more in this day and age where we are all working electronically, doing online shopping, etc. It's not going to be uncommon. So the auditing standards will catch up. They did at some stage a year back or so ask if people had any concerns or anything that needed to catch up, and this was one of the areas mentioned. All right, getting back to the inventory counts instructions, everyone, you can imagine we did a little U-turn to get back to the main road. So supervision is important. Also remember now, when we are talking about this slide, we are talking about the inventory count instructions that the client gives to their staff. Okay, not our instructions. We are interested in what did the client tell their staff. We would like the counts to be done in teams of 2, because it is much more difficult to manipulate the records if there are 2 of you. In addition, it's just going to be helpful to have 2, because one can write, one can count. The one counting or the one writing down can watch the other one who is counting and ensure that they get everything that they need to count. Then we are also want to know that the client has indicated the locations and dates that the count will take place. There will sometimes be companies that have multiple locations, and those the staff will need to know which staff are required to be where and when that count is going to take place. We will also have some planning to do around that, and you will take note, or maybe you are already thinking about the fact that we will need to also know the locations and dates, so that we can plan around our clients' locations and dates to be there to see what is happening on the inventory count date. All right. Then we want to know that in the inventory count instructions, I know it seems like we've got a little bit of circular reference here, but it is not a circular reference. Counting instructions. We want to know that the client said to the staff, this is how you are going to count. You're going to count from this corner of the warehouse to that corner of the warehouse in order, all the way down, snaking through the warehouse to ensure that we count everything. When you have counted, you will put something on to show that you have counted. You will write on the count sheets in ink. You will, where you bring back your sheets and there's a discrepancy between what you have counted and what is on the system, we will perform a recount. The recount will be performed by a different team, etc. So we want to know that the count instructions, we will consider what the count instructions covered and whether that covered what it needed to. So who will count, where will they count, how will they count it, How will they do the recounts? How will they establish if there's a valid adjustment to the stock? We would like them also to do a test count by an independent person. So if Helen is in charge of the inventory count and Helen gives instruction to the staff, and Jim and Ben have to go and count the stock start to finish, a good control for the client to have is for Helen to then go and perform a test count. So when the sheets come back, or even before the sheets come back, the test count can be done, where Helen will go and select some items to be counted. So remember, we're talking about the client doing a test count, not our test count. So Helen goes and does a test count, writes down her number, and when Jim and Ben return to Helen and return their stock sheets where they've noted the number, Helen compares their count number to her count number as a form of control to see that they are performing the count in accordance with what they were told, and also that there's no manipulation of the accounting of the inventory records. Okay. Right. In the case where we have weighing equipment, so something which needs to be weighed, once upon a time, I went and was counting keys. That's right, keys. You know those little keys in your padlocks and keys in your doors, and proper keys. So there were a lot of keys to count. And if you think about it, I mean, where does that locksmith get his keys, which he can cut when you say, I need a spare key for my front door, here is the old key, and he goes and cuts you a new key. He has to get that standard little key which he can cut from somewhere. Okay, so I counted keys, but there were thousands of keys to count. So you could, if you had all the time in the world, literally sit there with the pile of keys and count 1, 2, and move it over as you're counting it. However, it's not the most efficient way to count that kind of stock. So what they had is they had this cool little scale, and on this scale, it would give us a count of the keys. So how you set the scale to know what it was counting is you would zero out the scale. Let's say you had to put a container on to hold the thousands of keys. So you put a container on the scale, you zero it out so it reads 0, so it is not adding the weight of the container to the key count. Then we would put in 1 key and tell it we have put in 1 key. Then we would maybe put in another key and tell it there are now 2 keys. And in that way, because the keys were standard, they all weighed the same weight. And so we would give the weighing equipment a little test after setting it, make sure it's counting the right number, and then we would dump all the keys into the container and it would give us the number of the keys. All right, so when we talk about the accuracy of the weighing equipment, we want to know that if the client has to make use of weighing equipment, that they are testing the accuracy of that weighing equipment. If the scale is not accurate, the count is not accurate. So another example I came around recently, it's not quite inventory, it's actually biological assets, is abalone. There's an abalone farmer and they weigh the abalone because the abalone is sold based on weight. So they account for the biological assets which turn into inventory as a weight. And places like this will often, a good question to ask also is, how often do you calibrate your weighing equipment? Because you will find that they will make sure that weighing equipment is pretty accurate. They will have it serviced often, have it tested often. They probably perform tests on the weighing equipment throughout the year. I would like to say some of us would like our scales to reflect something a little bit. We would like to claim our weighing equipment at home is inaccurate, but it probably doesn't get used as much as their weighing equipment. All right, so if any weighing equipment is used in the count procedures, you have to test that is it accurate before we rely on the weight. Okay, so especially in food producers, I know recently I was involved with a chicken farm, and they sell frozen chickens, and those frozen chickens are sold by weight. And so the box is labeled with the weight, but we needed some way to verify that what's going into the box is an appropriate weight. All right, then with regards to use and control over pre-numbered tags and sheets, what we are interested in is if I give my staff who are counting, so that if the client gives their staff sheets with the list of inventory on it, we want to know that sheet comes back in its entirety. So if I've given you 3 sheets, I want 3 sheets back. And to also verify that all of the pages come back, because remember, in some cases, it's not just one team of 2 counting. There's 6 teams of 2 counting or 15 teams of 2 counting. It could be a pretty large entity that we are counting at, where we got pages and pages of inventory items. We want to make sure that we get all of those pages back. So what they talk about when they say use and control over pre-numbered tags and sheets is, how do we know we got all the sheets back? For instance, if we had tags which we needed to put on the inventory items to show they were counted, how did we make sure it was used and put on, etc. So it's the controls over how do they know that what they wanted to achieve, that all inventory gets counted, and that we have achieved that objective. Okay. I see there is a question, so I'm going to address it now because it's probably relating to something I've already said, so I don't want to wait too long. So it says, usually if the item is being weighed in a container, they use the empty container as a tare. So the starting point would be negative, weighing the empty container as a starting point. Yes, so there can be various ways that they do it. So they might weigh the container and just take off the weight of the container. So the abalone farm, for instance, they know the weight of every container that they put the abalone in, because they try not to I want to say disturb the abalone too much, but they do have to remove them from the water. But the crates that they put them into, they don't actually zero out the scale before weighing. So they will weigh it including the weight of the container, and then they will take off the weight of the container. So yes, it can be done in varying ways, as long as we ensure that the accuracy of the weighing equipment is tested and done. And depending on how they do it, so if they start with a negative weight, like you are referring to, so they start with minus 5 grams because the container is 5 grams, then we just need to make sure that they have actually started with minus 5 grams. And when they put on the container, make sure you test that the container is only 5 grams, so that is a valid number that they are using, or it's close to. I mean, in auditing, we do also use estimates. So we will test that negative number is correct in some way, or as close to correct as we can get it. And then they will, like you say, weigh the whole container with the goods in it. Okay, good point. Thank you. All right. With regards to accurate identification of the stage of completion of work in progress, or WIP, work in progress is if, for instance, I am at a manufacturer, they are producing goods, so they create the goods. Sometimes, well, often, depending, actually, I won't say often, because it just depends on the type of entity you're at. Some manufacturers will have items of inventory that have started the manufacturing process, but at the year-end date, they are not complete. So they are stopping somewhere in the middle of, not necessarily in the middle of, but somewhere in the process of manufacture. So we refer to this as work in progress. So it is the items that are not yet finished and ready for sale. Okay, it is still inventory, but now we have to still account for this inventory. So we can't just leave it out and say, okay, we're not going to count that because it's not finished yet, we can't sell it. We still have value. All right, so also just speaking about value, let's have one. I promise it'll be a smaller side road, this one, but very much related to our main road. If you think about what an inventory balance actually is, you are looking at a number on the balance sheet, which represents goods laying in our warehouse, or in the case of electronic stock, codes or an asset somewhere that we are going to sell in the normal course of business. Okay, there's also, yes, inventory, which is consumables to be consumed while we are making our money, also possible. But let's talk about the actual goods which we are counting. So that inventory number, it is just a representation of the value I have to sell or make money with. Okay, so when we are looking at that inventory balance, it is essentially, we may have purchased something and we want to carry it on our balance sheet because we're not going to sell it in that period, we're going to make the profit later. So when we look at WIP, we are looking at, we need to carry that value forward into the next period, and then it will be finished. So we will add or capitalize additional costs to finish it, and then we will get to our finished product which we can sell. And when we sell, inventory gets taken to cost of sales. Okay, so stage of completion of work in progress is going to, in most cases, I don't want to say all, because it's not like I've been exposed to every single industry there is. So there may be instances where you have come across a work in progress which is a definite number and not so much of a estimate, right? So for work in progress, it's often an estimate, and it will be based on how far along in the process that item is. Okay, so often the client will have, this is their business, they've been doing this for a number of years, they're very experienced with it, so they will have an idea of when it gets to this point in the process, it is this much complete. So we need to understand that process, and we'll get to that again on a later slide when we talk about what we're doing from our side. What we are looking at here, or what we want in this instance, remember we're talking about the inventory count instructions, we want to know that the client has communicated to the staff performing the count how they will go about identifying the work in progress, the WIP, and what they need to note down on their documentation regarding the WIP, because they cannot write down, I counted 5 cups, but the cups don't have handles on yet, so they need to say 5 cups at this point in the process, for instance, so that it doesn't get included in finished stock, it gets included in the WIP balance. And the reason that's important is because my WIP balance obviously has a different value to what the finished goods have. Okay, so that's, we're interested here on this slide in, did the client cover this with the staff so they know to accurately count and account for the WIP? All right. So I have a question. Do you have a suggestion for an accurate stock take for a bar? Only alcohol. Okay, interestingly enough. So I have not personally been involved in the counts at a bar, but from what I hear, the client will generally have a very good idea of how many, for instance, tots are contained in, if it is some sort of spirit, like a gin or a, I don't know, something that goes in a shooter, they will have a very good idea of how many tots go in every bottle of that. Thank you, Joanne, confirming some sort of measuring device for the different items. So they will generally have an idea of how many tots are in each bottle, and they will also have an idea of how much of a bottle, there will always be wastage. So they should or can often have a system which will be able to tell them how much of a bottle is generally wasted, or it will automatically be taken into account in assessment of how many tots are available in a bottle, which incorporates the wastage on a complete bottle. So the best is to go and ask the client, how do you go and about counting it? If it's a closed bottle, it's easy enough because you have the number of mils. You can also work out a tot is XYZ mils. This bottle is XYZ full. Well, it's XYZ mils when it is full, and we are sitting at halfway, 3/4. Sometimes it will be an estimate. For beers, etc., it's a little bit easier. They don't get sold, I want to say, in parts. When someone buys a beer, they buy a beer. So it just depends on the type of alcohol and what system the client has in place to do the estimate and how they are estimating it. And we will assess what that estimate is. So if they are using a tot measure, we will ask them, how do you know how many tots are in a bottle? They will tell us, look at this historical evidence, or we know this is about how much we sell of the tots when we have this many bottles in a month, and this is how much we go through. And so they will have some form of understanding of how the business works. So funny. My colleague Yuane says, don't throw it out and measure the number of tots because you will lose alcohol. True that. Okay. Also, some bottles can't just be opened to go and pull out and count. Okay. The client's also definitely not going to want you to be measuring out their tots and spending days pouring their alcohol and inhaling alcohol fumes. So there will be some estimates. It will often be an estimate, but you can get it. There's nothing wrong with an estimate. We just want to make sure that the estimate makes sense and it is as close as we can get it to what's or as accurate looking as we can get it to be. Okay, I hope that makes sense. All right. Accurate identification of slow-moving, damaged, or obsolete items. So what we want the client to have also looked at is, do they have stock items, for instance, laying in a corner, gathering dust, big thick layer of dust all over the inventory item, and it's therefore very clear this item isn't moving. It's a very slow moving thing, because what that indicates to us is that there may be an impairment. So we know we've got to measure inventory at net realizable value, so our cost less selling, well, not always cost less selling price, but the value that we can get for the item when we sell it. That's what we're trying to get to, because remember, like I said earlier, the inventory balance is just a reflection of the value which we have to sell. So if we are thinking of it in that manner and we have an item which is slow moving, it means we might have to offer that item at a discount. That means we should adjust the carrying value of the inventory because the value that we are going to get in the future is not as much as we are currently reflecting. So we want the clients to tell their staff, please go and look around for if there's anything in a corner, gathering dust, or you can see an inventory item has not moved for a long time. Look for damaged items, things that we are not selling, things that have damage to the point where we actually have to impair the stock, because we have to either sell at a discount or we have to actually chuck the stock away. Okay. So we want them to tell them that because we want the staff, and in addition to telling them that, we want them to tell them what to do about it. So for instance, just tell them, take the damaged stock, remove it from the pile of the fixed stock so it is clear this is damaged stock, and keep it in a separate little area so it can be assessed after the count, for instance. Make a note on your count sheet that there were 6 damaged items of that inventory code. Okay, so we want them to make sure they note it so it is dealt with, because it doesn't help if the client says go and count the stock and the staff run off and they count all the stock, but the 6 damaged items which cannot be sold, they just count them and include them in the count. Then we're not going to accurately reflect our inventory balance at year end. Right. Okay. Then getting to this other point of identification of the inventory owned by a third party. Also, if anyone is feeling like they are going into the darkness, i.e. falling asleep and having a little bit of nap time, As soon as I am finished these inventory count instructions, we will take a quick 10-minute comfort break. So please hang in there. Do not let your eyelids close. Stay with us. Okay. Accurate identification of inventory owned by a third party. So what we are interested in, we want to make sure in the client's accounting records, they have the inventory which they have the rights to. So we own that inventory, we have a right to sell it, it is our value, we get to have that value. We do not want inventory which is owned by someone else included in our inventory count, because that would mean we are overstating the inventory balance. We are counting stuff that we don't own. So the client will obviously know in their normal process, in their business, I either keep inventory which is not actually mine, or I don't. Okay. What we want from them in the inventory count instructions, if they are a business which holds, you may have heard this term before, consignment stock, then you want to know that they have instructed the staff, this is consignment stock, do not count the stock, or count the stock, but it is accounted for separately on this sheet because we have to report it to the supplier of the stock, but it is not our stock, so we do not include it in our count sheets. Okay, consignment stock is the thing you usually learn about in your studies, which is here, customer, have my stock, put it on your floor, sell it for me, but I will keep the risk, the cash flow implications, etc., of holding the stock, so you don't pay me until you actually sell the stock. And then at that point, when you sell it to the actual end user customer, then you can pay me for the stock. Okay, so that's usually what they're talking about when it's inventory owned by a third party. Also, just consider things like in our case study, which we will be working on in the upcoming sessions, and you have touched on a little bit really in last week's sessions, wrap-up manufacturing. Wrap-up manufacturing has stock of ink, and that ink is actually a customer's ink. But what happens is this customer will order packaging material. Wrap-up manufacturing will manufacture the packaging material, and they will print something on that packaging material with the client's ink. So it's not our inventory. It is not quite actually falling in with consignment stock because I'm not on selling it. It's that I'm using it in my manufacturing process. So also just be aware, it's not always consignment stock. Ask about, do you have any stock on the premises that is not yours? Which should not be included in the count. Okay. And again, we don't include in the count because it is not ours. So we are not allowed, we don't have the rights to it. We cannot hold that value. Then movement of inventory during the count. So to ensure that we have counted everything and we have the correct value and the stock exists, we want to not have any movement of stock during the count. But at some companies, they continue to trade while the count is going on. But what we want from the clients in those instances is for them to have a process and procedure for accounting for any movements which will happen during this count process. So if there is a delivery of stock on the last day, now you have to keep in mind, you will have to think about what day am I counting. If my year end is 28 Feb and I'm counting on 28 Feb, if stock gets delivered on 28 Feb, it is my stock on 28 Feb. It must be included in the count. Then the client must tell us the process for, if there is a delivery, this is where it is put, this is how it is included in my inventory count. Okay. If I'm counting on the 1st of March, but my year end was 28th of Feb, I am then got to think about, if I receive a delivery on 1 March, I do not want to include it in my inventory value because the value of inventory I'm looking for is the value on 28 March. So on 28 March, I didn't have this delivery. It wasn't my stock yet, so I must not include it in the count. The same with the opposite direction, okay? So if I have stock and I am delivering to a client, if I'm sitting on 28 Feb and 28 Feb is my year end, I am then going to, if I am delivering stock, if I put it in the truck and it leaves my premises and gets to the client on that same day and they sign for it and accept the stock, then it is a sale, but we just have to think about, is the sale accounted for before or after the count? Okay, we need to make sure that stock is not in my closing balance, but depends on when they process the sale. Okay, so if I'm counting and they're going to leave the processing of the sale till after the count, I need to include it so that when they raise the invoice and take it out of inventory, then I've gotten to the right number, the reconciled number after the sale. Okay, I hope that makes sense to everyone. So we have to consider, when do the risks and rewards pass? So just think about, when does it become someone else's stock? When does it become my stock? When am I counting? What number do I want? Okay, not what number do I want 100, so I'm going to somehow make 100, as in what number do I want the value at year end? Think about the transaction that is happening, the movement that is happening. Okay, so we want the client to have a process to control any movements of inventory on the day of the count, and to make sure that they have accounted for it appropriately, so we get back to a year-end number. Right, I'm just going to deal with this last question before we take a short break. Would we have to wait for a signed delivery note? Yes, because there is a risk that it takes, let's say they've loaded on the truck, but the truck is an overnight truck, and so it only gets delivered on 1 March. So the signature on the delivery note reflects as I received my stock 1 March, which means the risks and rewards of that inventory did not pass on 28 February. So we would want a copy of any movements which happen in the inventory count on the day when we doing the count. So any sales, deliveries, etc., it is highly recommended near to just definitely go and get copies of any of the documentation so we can make sure we got to back to the right number. So it's a good question, because if we don't get that delivery note back, we won't know, did it get delivered that day or did it get delivered the next day, and therefore should it be in or should it be out? Okay, so good question there. Right, so now we are going to take a short little break, just for 10 minutes. So I've got 10:04 on my laptop, so if we could come back at 10:14, I'll forgive you if you are back at 10:15. Short break before we wrap up the rest of it and talk through the balance of the slides. Thanks. Welcome back, everybody. Apologies. Oh, so funny. I was literally sitting here wondering why you could not see me, but I have this awesome little cover for my camera, which I had closed. My bad. Okay. Welcome back, everybody. I was having a little chuckle to myself during the break because I was imagining if, like me, you started in a rather large group, you started articles with a large group. When I gave you that break, you were probably all in my time at the firm. We only had a kitchen. We didn't have a cool coffee machine. There was a kettle and a mug. Subsequently, since I left, they upgraded to a coffee machine, which was, yeah, okay, thanks. And I was imagining you all trying to rush at the same time to get this coffee, which I, put this delicious picture on the screen, and there's some of you that would have not made it. Okay, but anyway, what I will say is we've got 45 minutes left, so get ready to make the mad dash to the kitchen when we are finished and get there first. But don't run, because you have to be professional. All right. Also, I switch on my camera randomly so you can see the cool Lego behind me, but now I shall switch it off. And you will have to wait if you missed that, and pay very close attention to when I next put on my camera. And you see how I did that there? All right. So let's move on. We are finally moving on from the inventory count instructions. So remember, the whole section which we've just covered now has a lot to do with our client giving their staff appropriate instructions. about what they need to do on the account, how they need to go about it. And then we will obtain those instructions or listen to those instructions or ask about those instructions so we can assess the controls over the inventory count. Okay. In terms of locations, we would want to visit the locations which have material inventory balances, but it is not always possible. So sometimes we do have things called a rotation schedule. But if you do read the requirement, it talks about each location visited by a firm or associate, or in the case of less significant locations, independent management. Okay, so where we have a very significant, very high balance of inventory at a certain location, highly likely we need to go and visit that, but we might also want to go and visit, in the case where there are multiple locations, we might want to also go and visit some of the smaller locations as a sort of form of an unpredictable procedure, right? Often firms will have a rotation schedule, so they will keep track of the multiple locations of the client. We usually will go and count at the material balance location and then rotate some of the smaller ones just to make sure that we cover everything, because you don't want that one location to be a complete mess, which could result in a misstatement that can become quite significant, possibly even material. Okay, if in the case of locations that are quite small, very low inventory balances, we do want to know how the client makes sure that the count and the inventory records for that specific location, that branch, for instance, is accurate and complete. So we will want to check that they have sent someone there as a minimum. An independent management, what they mean by independent management is someone not from that branch to just go and check that the inventory count is appropriately completed. All right, then in terms of the thing that we haven't covered yet, on the previous slide we spoke or touched on consignment stock that is provided to us and we don't want to include in the count. We could also be the, I say we, what I mean is, apologies, I'll confuse you later. The client may have stock which they provide to a customer on the basis of, here, have the stock, put it on your floor. When you sell it, pay me for the stock. Otherwise, I will still hold all that risk. I will still insure the stock. I will still have the cash flow implication, as in, because there are cash flow implications for holding stock, right? My money is tied up in the goods I have sitting on the floor. And when I sell it, then I have the cash flow back in. Okay, so there's consignment stock we could have provided to a customer. We should ask the client if there's any instances like this, because that consignment stock, the risks and rewards have not passed to that customer where we put the stock. So it still needs to be counted. And in that case, we would send a letter or notice, I guess in this case, email. I don't know why I'm talking old school, like we still send stuff via postal services. An email to that customer to say, please, could you confirm the consignment stock you have on your floor? It should be a regular occurrence anyway for the client to monitor that stock and get report backs from that customer, because they want to get the money in for the stock that they have sitting there, as well as make sure the inventory records are appropriate. The nice thing about consignment stock is that when that customer provides us with that confirmation, it's like having an external confirmation of the stock number that is there. When I say external confirmation, I'm not talking about a big formal thing like you do with, for instance, a bank confirmation. What I'm meaning is it is an external source providing us with evidence of that inventory value. Okay. All right, then let me just make sure I've covered everything there. There may be instances where either way we could provide assistance to another firm when they need accounts to be done, or we could need the assistance of another firm when we do accounts. So if there are multiple locations and we have a location which we cannot travel to, maybe we don't have the staff, we don't want to incur the expense because the cost of traveling there is more than just asking another firm to go and perform part of our account for us, especially in a network scenario. they might make use of the network auditors to go and count at the locations which are in that area of that network firm. So there may be cases where we are, let's deal first with assistance by another firm. So this is where we have engaged with another auditing firm. We say to them, please could you send some staff, would you be able to send some staff on this day at this time to this client of ours to do the stock take procedures. In that case, we will also have to communicate with that firm, please go and count this many items, sheet to floor, this many floor to sheet. Please could you arrive in time to do this, take a look at the, or listen to the instructions, or look at the instructions. Here is the phone number of the person in charge of this client who they can contact if they have any questions. Please could they fill in this documentation and tell us about these things. And so we will issue appropriate instructions to this other firm and the staff that are going there to perform the count for us so that we can get it back. And in that case, you will also on the audit file have to assess our reliance on another auditor. Okay, so we will assess if they are competent, subject to the same rules, etc. When they did this little task for us. All right. I see there is a question. I'm going to pause for one moment before I get to assisting another firm. The question is, in simple terms, consignment stock should not be included in the stock count. It is depending on the scenario. So there may be, in the case where, like on the slide, we're talking about consignment stock provided to a customer. So this is our stock, which we are providing to a customer to sell for us, but we say, don't pay us until you've sold it. We'll still insure it. It's still our stock. We take all the risk regarding the stock. In that case, where we still hold the risk for the stock, then we must include it in our count because it is still our stock until they have sold it for us and paid us. So in that case, we include it. In the case where we have consignment stock, which is stock which we got from our supplier, which is sitting on our premises, which we are selling on their behalf. We haven't fully purchased it yet. We didn't pay them for it. We don't insure it. It is simply sitting on our premises, and we promised we would try to sell it for them. In that case, it's not our stock. The risks and rewards did not pass for that stock, and therefore, or if you're talking if it's 15 terms, the control for that stock did not pass to us. In that case, we exclude it. So you've got to think about what the consignment stock is. So if it is consignment stock I provided to the customer, that means it's still mine. It must be included. It is still my stock. I must put it in the balance at year end. If it is consignment stock I have at my premises, but it is not my stock, I didn't pay for it, I don't have control of the goods. If that supplier comes and they say, give me my 10 boxes back, I have to give it back to them. In that case, I don't have control over that stock. It must not be included. So it really just depends on from which perspective you are looking at the consignment stock. Please let me know if that makes sense to you. Okay. In the meanwhile, while we wait and see if that made sense to everybody, I'm going to talk about assisting another firm with account. So in some cases, you might be sent on an audit count for another firm, and in that case, you would need contact details of the person who's responsible at the other firm. So someone you can call and confirm details with, know who to send the stock count sheet to. Also just check in with them, how many items do I need to count? Which way is there a specific risk based on last year's count that you want me to address? What do you need me to do? All right, so you will specifically get instructions. If you don't get them initially upfront, you will request those instructions to go and do the count for someone else. All right. Okay, I'm glad. If anyone still needs further explanation on the consignment stock, please shout. For now, I'll assume everyone's okay. Apparently, I explained it in a good way. Sometimes I do end up going around in a circle, and then I am so wrapped up in my auditing and excitement about the question that I don't get to the point, which is why I always like to check in with you guys. All right. Let's talk about the client count performance. Okay, so sometimes the count, as we have mentioned before, is not on the year-end date, but what we are trying to get to is the year-end number. So when the client performs the count not on the last day of the year, they also should have procedures in place to establish what the year-end balance was. So if they are counting on a different day, they must have something where they reconcile back to the year-end number. So if the count is performed before year-end, the count needs to be rolled forward to the year-end numbers. So in other words, if I have my inventory count on 26 February, but my year-end is 28 February, there might be transactions in those 2 days which affect the inventory balance. So the client must have controls over the transactions or how they will reconcile back to, or in this case, forward to the year-end date number. Okay, so in other words, if they count on 26 February and their year-end is 28 February and they have 3 sales and 1 delivery of stock in the intervening 2 days, they must have a process for keeping track of what transactions occurred between my count date and my year-end date, so that when they now processing the count numbers into their accounting system, they adjust them for the transactions which occurred between the count and the year-end date, so I get a proper year-end date value. So they will go, I counted this many items on the stock count date, let's say 10 items or 10 cups, and in the intervening period I sold 3 cups, so I must now, my year-end date should be 7 cups is how many I should have in stock. So they must make sure that they have a process in place. We should ask about, client, what is your process for accounting for those transactions between the count date and the year-end date? So when we audit, we'll also have similar procedures to account for the transactions between count and year-end date, but the client must also have these procedures in place. Okay. In the opposite way, if the count is performed after year-end, then the count needs to be rolled back to the year-end numbers. So you may have already heard these terms, roll forward, roll back, and if you just think about it logically, about it's talking about from where we are to where we want to be, we either want to go forwards with the number or we want to go backwards. Okay, so in the case where the year-end happens, and then we have some transactions, and then we have an inventory count. So we count on the 3rd of March, but my year-end was on the 28th of February. If I had any transactions between those 2 dates, I must make sure I keep track and I adjust my inventory count numbers so I get back to a year-end date number. All right, so the client must have procedures to account for this, and also when we go and do our counts, depending on when we also do our count, we will perform similar procedures to them in terms of verifying the transactions that have happened between the count date and the year-end date. Okay, so number 1, as an overall perspective, we want the client to have the procedures so we can look at the procedures and decide, were their procedures adequate? Is there evidence that procedure was implemented? So go and look at the little recon back to the year-end date count, the year-end date number, and we will, in all likelihood, when we do our test count, which remember is only on a sample of the stock items, so when we do a test count, we will also perform a rollback or roll forward procedure, verifying all the transactions that happened between when we counted and the year-end date. Okay. Right. When the client performs their counts, they need to make sure that they plan and clear and arrange their packaging, pack all the inventory to facilitate an efficient count. So let me give you a very simple, silly example. imagine that you would like 10 plates, but your kitchen, the plates are spread in multiple drawers, multiple cupboards. I know no one packs the kitchen like this. There's a reason for that. But imagine it's all across the whole kitchen. So now you go and you see, oh, I need 10 plates. So you go to your kitchen and you start searching through the cupboards and the drawers, etc. Eventually, you manage to find 10 plates across all of these cupboards and drawers that you've looked in. And because you've got 10 plates, you stop counting. But in the cupboards and drawers that you have not looked in, there could have been more plates which you didn't have on your list. And then you wouldn't have counted them. All right. I have been in scenarios also where I've once counted at a furniture manufacturer. So they build manufacture furniture like chairs, tables, etc. So we counted all the stock and everyone agreed, and we agreed with the client, and we checked all our figures and everyone was happy. And when we left and then we got the final stock sheet, there was a discrepancy. And what had happened on the discrepancy is the client had display furniture. So one item or two items, or in the case of a set of chairs, maybe 6 or 8 items, sitting somewhere else on a showroom floor, not in the back where we were counting in the warehouse. And so they realized this after we had left, and they included in the account, and then we were stuck now because we didn't include it in our account, and now there was a discrepancy. And so we had to go and verify that they actually do in fact have these items on display. So apart from making sure that everything is neatly packed, similar item, well, not similar, the same items are all together, and also packed neatly to facilitate an easier count, not a big pile of mess. Also, just make sure you consider when you're counting, if you are at some sort of a retailer, someone who sells stuff at basically a shop front, that you go and look if they have stock on display. I also once counted at a shoe store, which sounds like a dream, but really wasn't ideal. We'll get to it a bit later, but I did have to check every single box had two shoes in it to make one pair. And there was always one box with one shoe not there because there was always one shoe on display on the shelves. So it was a little bit irritating, but a necessary procedure to check that the box had both shoes in. All right. So when the client does the count, they need to make sure that they have packed everything well, because if they don't pack it well, we're going to, there's a higher likelihood that the count will be a little bit of a mess, and we won't identify all of our inventory items, count all our inventory items, or we will miscount. We will also take a look at, the reason we are there also is to look at the client or watch, be a little bit like a stalker, stalk the employees through the warehouse, watch them count and follow the count instructions. If there's some counters who are not following the instructions as they were given, you actually have to be the tattletale. Hate to tell you. Go and be the tattletale and tell the supervisor of the count. The reason being, if you can rectify that on the count date, and then they follow the instructions appropriately thereafter, we're getting much better assurance than if you leave it and now you're always going to have this nagging doubt about, did I have an accurate count or not, because these people were not counting as they were supposed to count. All right, and when you go be a tattletale, you don't need to be like, Jim and Ben are not following the instructions. You can be a little bit more diplomatic about it and go to Helen, for instance, and say, Helen, I've just been walking around making sure everyone's following the count instructions, but I have a concern. I'm not sure Jim and Ben got the instructions clearly. Maybe we need to just check in with how they're doing the count. Okay, so you can be a bit more diplomatic about it. You don't need to go essentially stand, point, shout, accuse. You can do it in a bit of a professional manner. All right. Okay, also just to touch on that point with one more thing, this is prime time to observe this control happening at this time when we need it to happen. So we're getting quite a lot of assurance. So we don't want to ruin that assurance by not getting everything we can out of it when someone's not doing what they're supposed to be doing. All right. In terms of estimates, so estimates with inventory can arise two ways really for our inventory count, not speaking of the inventory balance, speaking about the inventory count. It could be that the client literally has to estimate the number of items, or estimate a weight, or estimate the quantity of an inventory item. So their whole inventory or certain items of the inventory can only be estimated. Or it could be that I have work in progress or WIP, and in that case, I need to estimate how far along in the process it is. So usually we will look at what, I think here I want to say almost, don't be afraid to ask your client how they do it. They are the ones sitting in this industry with this stock, have all the experience with it. They're highly likely to have figured a few things out over their years dealing with this stock. So don't be afraid to ask them how they do it. And you would have to understand their procedures and processes anyway to understand how they look at it and if that makes sense. You're also smart people. So just from a logic point of view, you would understand their process and see, does it make sense what they are telling you on how they are accounting for the stock? So in terms of a management expert, for instance, in this case, there are sometimes we have stock which requires, I want to say, client know-how. So this person could be, it doesn't always need to be, a management expert is not always someone external to the company that they hire to come in to do evaluation. It could be someone who is management, who is an expert in this item of inventory, and so they have the expertise to make the estimate. Then we can go and assess whether they do have the appropriate experience, the appropriate knowledge. How did they get there? How many years have they been doing this? How did they do it? And see if we can rely on what they have done. We will also then, while we're on the count, inspect what they have done. So if they say, I take a look at which station this item of inventory is at, and when it is at the splicing machine getting cut in this way, I know it is 50% through the process. We can also look at that and go, yes, it is at the splicing machine. Please, can you, Mr. Management, explain to me the whole process, start to finish in the manufacturing? And they say, well, it starts with, we have this plastic, we melt it down, we then put it into a mold, it goes into an oven. Guys, I have no idea how wrapping packaging is made, so just bear with me if you know better than me. I'm just on the fly coming up with this. So it goes into the oven. Once it's heated and melted and adhering to the mold, we dip it into this special liquid which lifts it out of the mold without breaking it. We then have to cut it into this size. Then it goes through to wrapping, then it goes through to painting, then it goes through to etc, etc, etc. And from that process we can get a feel of how long the process is and how many steps it goes through to go, is 50% a reasonable estimate? Okay. We also would then so that's really covering what the process is and the expertise. Remember also, if you do use a management expert, if we say, okay, this person's told me that, and we want to also rely on, not just blindly rely on, there's still work to do as described, but we want to also rely on the fact that they do have all this experience. We will do an assessment of a management expert on file to establish whether we can rely on their expertise or not. And then just in terms of inputs, we're very interested in what goes into, so this all really holds hands, especially process and inputs. We're interested in what goes into this calculation. So sometimes they know you might have someone who produces something, and there are certain costs that go into that item to manufacture that item, and they know then the total cost that will go into that item, and from the production records they can see, I've already put in I don't know, I really want to go with gearbox, I'm thinking of boats. I've already put in the gearbox and the navigation system and painted the hull and done, I don't know, leather seats, and so I've gotten to this much cost of the total that I know I'm going to spend manufacturing this boat. Then we can test those inputs. We can pick up the production records, we can look at it, we can even ask them to show us the items, we can look at the invoices for those items, so we can get a good feel for what were the inputs into it, and therefore did we get to an accurate estimates number. So some of the estimates will end up being, so the calculation, for instance, of cost might happen only on the audit date. But at the count date, we must, as a minimum, as a general rule, always look at where in the process it is, mark that down, what is in that process, so what inventory items, where is it, how did they get there, and what is their estimate of the percentage. We cannot do this at the audit date. At the audit date, I can't travel back in time and go and look at what the WIP looked like at that date. All right. So you have to look at it on the count date. All right. I see I have a question. Okay. Let me just. Okay. I don't know why it is. Sorry, it's come through a few times. What is the most effective method for identifying expired items in a pharmaceutical company? Sure, I have never had to do a pharmaceutical company, but what I would imagine is they must surely have, I think step one would be to ask management again, ask management, how do you identify the stock that is expired, and make sure you do not give this to your customers that come along looking for the medication. How do you monitor it? It is highly likely that they actually have a system in place which will flag any expired stock on the system. And then we could probably pull a list off of that system which will identify the expired items, and we can go and inspect those items, ask them what they've done with those items, how did they account for those items. Okay. I very, very, very much doubt any pharmaceutical company is going to say, oh, I don't know, if I whip it out and it's expired, I check the expiry date when I'm about to sell it, and then I go, oopsie, my bad. All right, I don't think these pharmaceutical companies are going to be highly regulated. Wherever you are in the world, they will be regulated because it is something for consumption, it's medication, it's risky. Okay, so they are very much likely to have a system in place. So I would definitely say you actually have to go and ask them, what is your process for identifying the expired items? What do you do with it? How do you dispose of it? Then you can also cover a bit of the environmental laws and regulations in the process as well. What do you do? How do you monitor it? So they will have a system in place. So we'll understand their process, take a look at the reports they use, perhaps do a little spot check on the reports that have come out, make sure if they say, we put all the expired medication over here, waiting to be destroyed appropriately, not thrown into the water source, then we can go and look, was that on the list that came off of the system? Yes, it is. So I have some comfort that my list of expired stock is accurate. Okay. Then there's another question which says, is it possible for the client to amend the instructions on the day of the count if the auditor feels the instructions were not adequate, or can we just recommend in the management report? It depends. I want to say it depends on what the instruction is. So I do like the ability to say, hey, management, there is something we kind of missed in the instructions. Would you mind? What are you going to do in this scenario? So let's say they did not give any instructions about recounts. So where I have a discrepancy between my inventory records and my my count, then we would probably want this to be something that they do cover. So maybe we ask them and we say, what are you going to do in the instance of recounts if it comes back? And then maybe they say to you, well, I will then appoint a new team to go and recount there to double check the number. I'm not sure they need to then specifically communicate that to the rest of the staff, but as long as they then have a process in place to do it. But I want to say it's not, for me, in my opinion, it's not sufficient for them to leave it for that day and then only we bring it to their attention the next year, because the recount is kind of a really essential process to getting to the right number. But if it's something like we I didn't explain to them to put a sticker on the inventory once you've counted it, but they have counted in order from one side of the warehouse to the other, making sure they count every item in every aisle, so they snake through the warehouse. The use of a tag is not really an essential in that instance. It's a nice to have and a better control, an improvement on a control. So it really just depends on the scenario or what instruction was missing. Just so that if we can rectify it on the day, it is first prize. If we can't, then it is what it is, and we'll report it in the management report, as long as that is a control that doesn't, I want to say, put into doubt the whole inventory count. All right. Okay, moving along. Okay, so our test count, we put some nice pictures in there for you. So this now, finally, we've gotten to our part. So a lot of what you've just done on all of these slides is actually just looking at what does my client do? And now we are looking at what do I do? Please take note. You will remember at the beginning of the session, I said, guys, what is really important is that you take note that the observation, the reading of the instructions, the assessment of the controls is just as important as the test count. And as you can see by the time, we have spent a very large amount of time talking about what our client does. Please take note of that. Okay, it is because it is just as important, because the stuff our client is doing is giving us a lot of assurance over the stuff that we are not counting. We are doing a sample. Okay. Right, so when we re-perform certain counts, as part of our count procedures, apart from everything you have done up until this point, you are then going to perform a test count. So we will select items from the inventory list and trace it to the floor. So go and find it in the warehouse and count the number of items and make a note on our list. And then we will also walk around the warehouse, identify an inventory item, count it, and trace that to the inventory list that we're holding in our hands. Okay, so when we're going from the inventory list, we are counting or going to find the items in the warehouse, we are ensuring that that inventory item actually exists. So what it says on the list is actually there. And then when we are walking around the warehouse and we are finding an item and tracing it through to the inventory list, we are then doing completeness. We are making sure that every item that should have been on my inventory list is in fact recorded on my inventory list. Okay, we're obviously not doing every single item, we are doing a sample, but from the sample, we are getting comfort that the inventory listing is complete. All right, so we will do, you will hear the terms floor to sheet and sheet to floor. So floor to sheet meaning warehouse to inventory listing or physical item to inventory listing, and sheet to floor being from the inventory list I'm holding in my hands down to the inventory item. And that is how we will verify our existence and completeness of the inventory. Okay. In terms of the wrap-up procedures, these are pretty important. Okay, so if you fell asleep a little bit during the waffle on the client's procedures, but then you woke up because we had cool pictures on the last slide, please also very much stay awake for this portion where we talk about the wrap-up procedures. So if you identify differences, so when you do your test count, you identify differences between your count and the stock sheets, you need to sort it out on the date of the count. You cannot ever leave this until the date of the audit, because all that will happen is when the audit team now picks up the stuff, also keeping in mind you may not be part of that audit team. You may have been sent on the count, but you're not sitting at the audit. And you're firstly going to make some people pretty angry, but that's not the main driver here. At the point at which you're sitting at the audit and you say to the client, we have a discrepancy on the number here, what was the problem? That client is going to say to you, we cannot go back and now relook at this. We had this count, you didn't come back with any problems, this is the number. Okay, which makes our test count pretty useless because we don't know what the problem was. Where you have a difference in the counts, you need to sort it out then. And ideally, you identify the difference and someone from the client walks with you and you count that stock together to establish which number was the accurate number. Okay, it is the count team, as in if you are sent on the inventory count, it is your responsibility to sort out the differences between the counts. It is also something you have to observe and make note of the stage of completion of the work in progress, again, because you cannot travel back in time to do this when you're on the audit. All right. You are going to obtain the client's count sheets, and you are going to make sure they were recorded in ink, or they don't. If they really were recorded in pencil, there's not erase marks all over the place. And then also that the counter and the check are signed, so that we can see that someone took responsibility for this count being performed. So this is you inspecting their rough count sheets. If detailed inventory records are maintained, i.e. if there is a perpetual inventory system in place where the system is updated with every transaction, so stock comes in, we have a sale, etc. A periodic system is the one where we count every month, and that's how my cost of sales lands up in cost of sales. There's not a every transaction update. Okay, so if they have a perpetual system and a detailed inventory record, we need to ask or watch them adequately investigate where they have differences between the count and what's on the records. So we need to make sure that they go and investigate why were there these differences that arose. Okay. Any inventory adjustments need to be authorized and initialed. The step on the audit program says by the count supervisor, because the count supervisor is usually someone quite senior in the company. But let me just place a warning here for a moment. If the count supervisor is just the person in charge of the warehouse, but you go and you see on the audit who's actually responsible for the journal entries is someone else, and that doesn't include this count supervisor, then you need to consider whether there should be further authorization of that journal entry or adjustment. Okay, because any adjustment to the counting records, if we've said this is how the process works at the client, this is who's in charge of authorizing journal entries, we need to make sure this journal entry to our account, our inventory records, is appropriately authorized. Right, we will take a walk through at the end of the inventory count. We will take a walk through the warehouse and check that all the items have been counted. So if they use stickers, we will check that there are stickers and only one sticker, so it wasn't double counted. Preferably if they've had to do a recount, it's a different color sticker, or maybe they didn't use another sticker. So we want to make sure everything was only counted once, but that everything was counted. All right, then we want to also see there's no empty places. So if something is packed in a cube and they have counted 5 boxes by 5 boxes and then worked out what the middle of that cube would be to establish what the inventory quantity was, we want to make sure that the middle of that cube, that stack, is not empty, so we haven't overstated the inventory balance. And for instance, like where I said I counted shoes and checked there's 2 shoes in every box. All right, then we want to also ensure that we've already covered this earlier, where we want to make sure they got all the documentation back, including any unused pages, so that we can make sure we also checked their check, if that makes sense. Because remember, if we could just ask the clients if they've done it and that was all the evidence we needed, then we could just as well get the trial balance and say, is everything in here? Is it all accurate? Is it all okay? And they say yes, then what's the point of an audit? Okay, so we have to corroborate any inquiries that we've made. Right, then with regards to the last bit of wrap up, we must also just take a look at the general condition of the inventory and make a note. It's in good condition, bad condition, or what they did with damaged, slow moving or obsolete inventory, so that we can see if they've adequately accounted for any impairments. So just make sure you take a look at what the inventory looks like. Ensure that any procedures designed to record the movements in the inventory were operating effectively. So if the procedure was, I put all delivered stock on the day in this area, you make sure it was in this area and then follow up on, should it have been included depending on what day I'm counting, or should it not have been included? Very good practice to record the cutoff numbers of all the inventory movement documentation. Okay, I'd really say this is a near essential procedure, because we want to make sure when we do our cutoff procedures at year end, at the audit date, we want to make sure we have the right numbers, that no manipulation took place. You only perform a test count. So we want to know the last GRV number was this, the last delivery number was this, the last inventory number, invoice number was this. Okay, that will be noted for use when we come on the audit, and then we will obtain copies of all or a number of the client's final stock sheets for later follow-up. All right, just think about this for a moment. You are sitting at the date of the count, you are counting, you verify with them, you make rough notes, you go back, you do your working paper, and then someone comes on the audit and they obtain an inventory list. So what you're essentially doing, imagine you've built a road. So you've got a river running and you build a road on one side and you build a road on the other side, and the road is perfect, it's aligned, it looks wonderful. But all that happens is everyone gets stuck on one side of the river or the other because you have not built the bridge. Okay, the bridge building is when you take those final stock sheets from the count and you agree it to the stock sheets that are obtained at the date of the audit. If you do not build this bridge, you may as well not have gone on the count. Okay, because you're not getting the evidence, because we don't know that the final stock sheet that we obtained and on which we are now basing all of our testing and what's sitting in the financials is actually what we did audit work on. Right, then remember, so the big thing, you'll remember I mentioned at the beginning, documentation is always a common failing. Remember that you as the person attending the count is responsible to make sure the documentation adequately explains what you have done, what you saw, what you counted, how the client's count went, etc. And a reviewer has not been on that count with you necessarily, so you need to tell them the whole story. Don't just assume that they will know the whole story. Okay, so reread, do a self-review, read through your documentation afterwards to see if you've properly explained everything that happened on the audit. Document enough to explain what was done on each procedure. Please, we will provide a little example of a completed attendance work program. I have tried to fill in a lot of detail in that program to give you some sort of an example of how you would document each procedure and how it was done. So take a look at that as a guide, but it is not the be all and end all of how we can fill this document in, but it needs to be enough that you understand the story. Okay. Do the documentation on the date of the count or within the next few days. Don't wait, because you will forget about important information. Also, if you do need to follow up with something with the client, you can't do it days and weeks and months later. You need to do it in the short amount of time, because then everyone has a fresh fresh memory. Okay. And then very important, please make sure your firm, so what you do need to go and ask about is, what is your firm's procedures for where to save this documentation? You are, as mentioned, you have gone on an inventory count. I do not necessarily have an audit file at this point when I've gone on the inventory count. So now I prepare my documentation of what happened in the count, assessment of instructions, my test count, my WIP, the cutoff numbers, but now I need to know where to put it. And guaranteed, the policy will not be just leave it on your laptop and we'll come hunt you down when we go on the audit. Okay, there will be a policy in place. They probably have somewhere specific on a server, on the cloud, somewhere where they want you to save this documentation so whoever goes on the audit can download the documentation and make use of it in the audit. All right. Phew. Okay, and we finished. Wow, that was rough. Okay. I hope you all stayed with me. If there's any questions, please don't be afraid to post them in the chat box. I see there are a few questions. Let me just quickly go through these. In the meanwhile, while I'm answering the questions, there is a survey which is posted into the chat box. If you wouldn't mind just completing the survey for today's session, you can give us some feedback. We always enjoy getting feedback on the sessions, helps us improve. It's kind of like getting some review queries, which are not as negative as everyone makes them sound. Okay, while you are completing my survey, I will address some of the questions. So one of the questions is, when the client is performing the stock count, the auditors need to be present until the end of the stock count and obtained the signed stock sheets that same day. Yes, that would be prize number one, is you stay till the end of the audit, you get the final stock sheets, you get the signed copies, so you can, exactly as you mentioned, so you have some comfort there was not any manipulation of those sheets. Sometimes it's not always practical to stay until the end because we might actually end up being planned on more than one inventory count on the same day, and so we have to leave. But then at the end of that day, you should phone and say, please give me the stock sheets, give me copies, email me a scan, etc. When you get those copies, examine them and see if there were stuff scratched out. Sometimes you can see it's a X marks, not always. So again, first prize, you're there till the end, you get the stock sheets, you see them, sort out the discrepancies. Second prize, you have to get it later, but within a very short period of time, same day preferably, or next day. I don't really think there is a third prize. There is just get the stock sheets. But good question there. Yes, preferably stay for the whole count, but yes, not always practical. All right, so while you're completing the survey, just take note that also on the 8th of March is the next probe audit session. Before that, on the 7th of March, we have a financial statements session if you are joining for that as well. So yeah, we will see you soon. Thank you so much for attending this session. It's been wonderful trying to share all my knowledge with you. If you have any questions, please don't hesitate to email us, contact us in some way, and we will make every effort to get back to you. Hope you enjoyed it, and if you missed anything or you want to listen to any of I don't think there were that many jokes today, but if you want to re-listen, please make sure you download the recording. All right. Thank you, everyone.